Hello guys, welcome back to another live stream. It's a Saturday, so we're going to keep it quite quick, but still giving you the key, overview of the overall markets this week. AJ, how are you on this gorgeous Saturday?
I'm good. Yeah. The weather's looking good outside actually in England for once.
Yeah.
Yeah. But unfortunately, the markets are looking down. With the Nasdaq looking down, the S&P looking down, and crypto looking down in general. So, you know, not too happy about this, but this is something that we have been anticipating because of during this COVID period we have seen so much upside that a pullback in the market is very, very necessary. And it's happening right now, and it's a good thing. What we want to find now is the bottom. We want to find good entry points. And
Where should we be
yeah,
placing our orders?
yeah, exactly. That's what we're looking for now. This is the time to be sort of looking at getting into the market when we are so down we are now. This is great buying opportunities. So it's not all bad, but yeah.
No, you're absolutely right. And just, guys, we're going to kind of jump straight in. And what I'm going to show you is do you know what I'm going to do first? I'm going to just give you a quick overview as to what's happened in the traditional markets. So the reason that we've seen traditional markets drop, people are talking about a bear market. Now, there might, in fact, be a bear market. Let me just get rid of this for a second. So there might in fact be a bear market, and that is as a result of the S&P dropping 20% within the last, I believe it was last week or so. But so when the S&P drops 20%, that is when it's typically seen as a bear market. Now, this has everybody worried, and this will lead to what's called capitulation. And I'll explain that later. But generally, the reason why we're seeing Bitcoin market and the rest of the whole crypto market, in fact, be down so heavily is because of this reason here of the whole, fear in traditional markets. And everyone's trying to look to safety, but in fact, there is no safety. So as we see here, there was mounting fears, 20% decline in the S&P 500. And that increases the chance that we will be in a bear market, not only in traditional or even riskier tech stocks, but also then obviously in Bitcoin. And just so you know, the average, there's been 17 bear markets since World War II, and the average drop across those is 30%. So if we enter a bear market, which people are kind of thinking that we are, technically we're not, because the S&P did drop 20%, but it gained 0.01%. So it didn't technically finish below 20%. So that's, it's extremely close. So we might be in a bear market. And if we are, the average decline is 30%. So keep that in mind. Now,
and there is room for more downside, which we'll get onto in a moment.
Absolutely. And this is why I know you've been speaking about this, AJ, and I absolutely love the analysis because we see like this, the numbers are really, everyone's kind of talking, we don't know for sure, but everyone's talking about that 22,000, 22,700, 23,000. It's around those levels. And that's what we've been saying all week, isn't it, AJ?
Yeah, exactly.
Yeah. And so you can see this here. So as reported by Cointelegraph, some analysts warn that Bitcoin could possibly decline to 22,700 based on historical price performance following a death cross. Now, we will get into this and show you exactly what a death cross is in a second, but just want to go through some more raw data. And so we see Bitcoin's put to call is at a 12-month high. So put is basically, it's an option. So you have the option to sell something at a particular price during a time. So people might be thinking, well, look, if it does get to, I don't know, 28,000, I want to be able to sell my Bitcoin at 30,000, because it's going to keep going down. So I want to have that option to sell it. But then a call is kind of like calling to order a pizza. It gives you the option to buy something at a particular price during a time period. So, people are essentially, there's quite a high ratio now because investors are looking to cover themselves. It's called hedging, to hedge their portfolios against a downward movement, as you see here. And so this is just like I said earlier, we see that stocks are entering a bear market. Like I said, technically, we didn't close in that bear market, but it says here, 20% decline off its January 2022 all-time high, if it closes 20% below that all-time high. So it's really not been great. And it's feeding now into the altcoins, because traditional markets obviously affect the more risky, should we say, NASDAQ, and obviously NASDAQ and Bitcoin are extremely correlated. And we'll show you exactly why in a second. But just to show what's going on with altcoins, we see a positive funding rate indicates that longs, i.e. buyers, demand more leverage. However, the opposite occurs. So when sellers, they require additional leverage. Now, causing the funding rate to turn negative. Basically, what this all means is that if it's negative, we have more people looking to sell. So that's kind of where we're feeling there's a bit of bearish momentum in the altcoins, and there's not necessarily it's not a huge margin, but it's still there, and obviously look at this.
Yeah,
I mean, I've never seen such a depressing heat map. AJ,
it's pretty. No, I don't think I have either.
No, it's it's just rubbish. What it's like. I mean, USDC is up. USD. Oh, USDT. That's good. Obviously, UST is not on here. But just to finally kind of wrap all this up, because I do want to get into some of the correlations that we're seeing in the stock and the crypto markets, is when we see a bear market, like I said, we do have usually a pullback of around 30%. Now, that is because of capitulation. Now, capitulation, typically what it is, it means surrender. So what this applies to is when people are holding stock for a long period of time, they're diamond handing it, but then they get a bit scared because everything starts going down. You enter a bear market and people think, look, I'm just going to take my loss. So even if they're at a loss, they'll just cut their position, they'll accept the loss, they'll wait for it to move down and get back in later. That's called capitulation. So we're seeing that across the board. And if we move into that bear market, everybody's going to be scared. And it's usually the institutional investors, the big ones, they begin to essentially start cutting their positions first because they're managing someone else's money. It's gross misconduct if they don't, manage it in the right way. And obviously if they hold a losing position. So what they do is they will typically sell first, and then us guys, what are we, like the YOLOers, the little retail guys. We usually diamond hand it for a lot longer, and that's when you see people posting on Reddit about how everything's a scam and the world is against us. But that's what capitulation is, and you're going to hear a lot about that in the next coming weeks and months. So I wanted to make sure that you guys are aware of that. But back to the overall position of where we're coming from is linking both the crypto and the traditional stock markets, and you can see on the screen here. AJ, what is it that we're seeing on here?
Yeah, well, we know that Bitcoin is following the NASDAQ. We know that, and this chart clearly shows that. So when we see the NASDAQ having that increase in price, we do see that in the Bitcoin charts. When we see the NASDAQ fall again, we see that in the Bitcoin charts again, and it continues throughout. Obviously, we've had the COVID dump. Exactly, it proves our point right there again. We had that COVID dump. Okay, the NASDAQ dumped, Bitcoin dumped. And then we had that big push after the COVID dump. And look, you can see it right here. NASDAQ has increased in price. Bitcoin has increased in price. And what we're seeing right now is a NASDAQ, falling in price. And we're seeing that in the Bitcoin charts as well. So, this is clear to see that Bitcoin is following the NASDAQ as of right now. Hopefully sometime in the future, we can sort of move away from that, but as of right now, we have to look at this because it is correlating with the NASDAQ.
Really good indication, and even like these little tiny, you see the little like tiny drops, they are almost exactly the same. Like it's not even just like the COVID crash. Obviously, everything crashed there, but it's just like and when you see Bitcoin at all-time high, where is the NASDAQ? it's literally at an all-time high again.
Yeah,
You know,
yeah, exactly.
it's absolutely, it's insane. It is really insane. It
Yeah,
does look exactly like the same chart, just slightly off a little.
it
But
does. Yeah, and
that's how they're so correlated. And this is why I personally, in order to find out what's going on in the investor's mind, I like to understand what's going on in traditional markets, and it's why I know I talk about it a lot. Everyone's probably like, we don't need a central bank, get rid of this guy. So I'm sorry, but I think it's really key to understand the mentality, and because obviously, if we are entering a bear market, we're going to see it first in the stocks, and then we're going to obviously have a massive crypto winter.
yeah, yeah,
In
definitely.
the
And
S&P is quite significant.
yeah, so what I want to show you over here on the S&P is that, since around 2008 and 2009, this is when we started to sort of, trade trade upwards along this yellow dotted line that you can see I've drawn on the chart here, and you can see clearly that we have respected this level, multiple times. You see we've bounced off this level. So when we see, see an increase in the S&P 500, we do always come back down and test this this yellow line as support, and you can see that we've seen that 3 times. Obviously, we have seen it previously back here as well, but we obviously had that the COVID pandemic that we saw that massive dump in all the markets, and we did dip below that level. So that's understandable. I'm not worried about that. But every time that we come up, we see that increase in price in the S&P 500. We do always come back down and test this support level. And as of right now, over the COVID period, we've seen the price increase so much in the S&P 500, and we've sort of just forgotten about this this upwards trending yellow line. But we cannot forget about this level, because we got so overextended here that having a pullback is necessary for us right now, and we are getting that pullback. I do anticipate for the S&P 500 that we are going to come back down and test this yellow line. I think that needs to happen, and I think when we do that, we can, then say, right, we are here, we are at the bottom, and then we can start looking at getting into our positions there. But I do think we are going to come down on the S&P 500 to test this line here, and which means there will most likely be more downside for Bitcoin as well. So yeah, as you said as well before, Ben, to confirm a bear market, we do need to drop 30%. We have currently dropped approximately 20%. I think we just wicked down below 20%, and we are back up above 19%. If we were to come down to test this line, it would be approximately 26%. So we wouldn't come all the way down to that 30%. There is a possibility that we could wick down below it, because this is the weekly chart. We could get some daily candles that do drop below this level. That is possible. But yeah, as I said, I think we are going to come down to this level, which takes me on to Bitcoin, because I think, there is more downside to Bitcoin. Obviously, we could hold this level that I've been talking about for the last few streams now. If we can hold this level, great, and then we can start seeing more upside. But as of right now, it's not looking too confident. And I know that you said this as well. We're not looking too confident. We're not seeing the volume that we would quite like to see that bounce that we saw back when we tested this previously. We saw more volume than we are seeing right now back then. So it would be nice if we could see some more volume for us to hold this level, but unfortunately, we're not getting that volume. So I think there's a higher possibility that we are going to break this support level. And if we do break this support level, then I am going to be looking at that $22,000 level, because we have tested this level so many times. When we see the price, pull back, each time we have come down and tested this 200 MA, this 200 moving average, and we found that as perfect support. So, as I said, if we do come down a little bit more on the S&P 500 and come and test that yellow line, then without a doubt, we will see Bitcoin come and test this 200 MA, this 200 moving average at approximately $22,000. And, you know, that correlates perfectly with what you said earlier, Ben, about the death cross and about their target being 22,000. So if I just get the moving averages on here, we have had that death cross. Let me just get my pen for you. You can see here we have had the death cross. That could signal more downside, but it could just could signal some consolidation. So looking previously when we've had that death cross, yes, we have
AJ,
had.
can you just quickly explain just like what a death cross is for
Yeah.
those who haven't heard it before?
Yeah, so for those who don't know what a death cross is, that's when the 100 or 99 day moving average crosses the 50 moving average. If it crosses it bullishly, that's called a golden cross, you know, and we expect to see, you know, price action to the upside like we saw back here. But when we get a death cross, which we are seeing now, then we tend to see the price decrease or at least consolidate. So you can see that last time we did get that death cross. You know, the 100 and the 500 M8, they did cross bearishly, and we did see price action towards the downside. But previously, when we have seen this death cross before, we've already had all of that downside momentum, you know, and then we were in this area. This was the area where we saw that death cross. We had a little bit more downside, as you can see here, but it was mainly just consolidation. So it doesn't always mean that we are going to see loads more downside, because we've already seen a lot of downside for Bitcoin. So, you know, this death cross has been confirmed. You know, we have seen this death cross. I don't think there's going to be a lot of downside to Bitcoin like we saw, you know, previously when we saw the death cross back here. I don't think we're going to see that. I think we're going to see, you know, what we saw when we had this death cross back here. I think we're going to see consolidation towards the downside, you know, and that could take us towards that $22,000 level, which, you know, lots of people are talking about right now. I think that, you know, that's a very realistic level to be talking about, you know, because there's so much FUD around it at the moment. As I said, if we can hold this. Sorry,
I
on,
was going to say, even if we get to that 20, you know, the reason why, like, you know, I don't feel as though we're going to have massive amounts of downside, you know, even after, if we do drop below and we break that 30K kind of support area, which we're currently sitting at, and, you know, have been a little bit up and down. But the reason why I don't think there's going to be too much movement to the downside is that realistically, like, there's going to be so many buyers at that 22,000 level, you know.
Whales, institutions, you know, they're all going to be getting in around those levels. You know, Michael Saylor says he's not going to let Bitcoin drop below 21,000.
Yeah, so exactly. And that's it. Like, there's just going to be so much volume. It's so much more well known that even these previous crashes, you know, there has been movement to the downside, but there was a lot less hype around it. There's a lot less people who knew about it. You know, you've got people who are buying the dip on a regular basis, you know, big companies, governments, countries. You know, I think Bulgaria hold a crazy amount of Bitcoin, like over 1 million or something like this, which is mad. But El Salvador, obviously, they like to buy the dip very, very often or whenever they can. And so, I just think around 22,000, it's going to be very hard to have enough selling volume at 22, you know, to try and counteract that buying action.
Yeah. So that's why I said, you know, in the previous show that 22,000 is my bottom. You know, I'm saying that now. 22,000 is my bottom. Yes, we can wick below it, but I think 22,000 it's going to be the bottom for Bitcoin. You know, this shows it perfectly. This 200 MA. You know, we've tested it so many times. I think we're going to test it if we do break the support, and that will be the bottom for us.
Perfect. Good. Well, there we go. That's it is looking as each day goes by a little bit more bearish. Like we said, you know, the S&P 500 is down pretty much 20% from its all-time high. That does typically indicate a bear market. 17 of these in the past since World War II, average of 30% drop. And you know, during these times, you know, right now we obviously see Bitcoin was down from 69 down now currently to 30. It does look as though we are going to continue that downward momentum. There's not too much volume right now, unfortunately. So you know, it's looking quite negative. Unfortunately, I personally, you know, I'm just going to finish up here, give you, you know, what I'm doing. So I have a certain portfolio where I just have cryptos that I hold, and I just, you know, I might top them up, but I won't sell them. I won't capitulate. in the crypto market, just because I believe in them and I've chosen them because of my research. So
you're
those will
looking
stay
for the future.
Yeah, exactly. Those are a 5-10 year play,
Yeah.
and I'm not going to expect short-term results from a long-term portfolio. So those will stay there. And then I'll have my trading portfolio, which, if we get to around 28, I'll probably short Bitcoin. And then, I'll have in a few buying orders at around 20, maybe DCA from 24, down to 22, into long positions from there.
Yeah.
But that'll be the way that I do that.
That's exactly what I'm doing. Dollar cost averaging. Starting at around 24,000, coming all the way down to that $22,000 level. Having some buy orders in there. Have one maybe at 20,000, 21,000, 21,000.
That would be great.
So that's what I'm looking for. And as you said, having that trading portfolio, might take a little short. We'll see. We'll see. See what the selling volume is. But yeah.
Then there
just
we go.
holding. Yeah.
So, anyway, that was our review. Everything that's happened in the news this week. Obviously, big Fed news, and that's affected the markets, and that's pretty much why we're in this position. So next week will be interesting. We will we'll keep you guys up to date with everything that's going on. So make sure you tune in, hit that bell notification so that you join us live. You can throw anything in the comments, and AJ will probably
smash the like button. Subscribe, and make sure you head over to Twitter. Give us a follow over there and turn the bell notification on there so you don't miss anything.
Absolutely. Good. Well, look, guys, I hope you all enjoy your Saturday. I hope that was a good weekly roundup. If you want us to cover anything next week, drop us a comment and we will do so. And if there's nothing else, have a good
weekend.
Yeah, I'm going to go enjoy probably a swimming pool somewhere.
Yeah.
All right, guys. Take care. Trade safe.